What is up, everybody? It is me, Tim, and this whole video is because it is tax season. You guys are definitely probably, if you haven't already, about to pay your taxes, and I guarantee you, you're probably like me and saying, what do I do with all of my crypto profits? Because it's a little confusing. So we brought on for this video, Lorenzo. He's not only our CPA, he's an affiliate of the channel and amazing at handling all the complicated tax issues in crypto. Lorenzo, how are you doing today?
Another day in tax season. We're taking a little break. Trying to educate the people, give them a little bit of insight. It's been crazy, Tim. It's been a really busy year. A lot of stuff happening.
Yeah. Are you mostly done with a lot of taxes? Are you getting a lot of clients coming in right now?
No, we're not done. But it's definitely the home stretch, I would say.
Okay.
If you haven't gotten all your stuff in already, if any one of my clients out there, because I do a lot on the channel, getting all your stuff in because we need to get all this done. We got another 18?
Yeah, not that long.
3 weeks left, so there's
okay.
still we're still working.
Yeah. Well, for anyone who has not done their taxes yet, this is the video you're definitely needing to watch. So I wanted to just ask you a couple of questions. This video not going to be that long, but some of the biggest questions people need answered. So I'm going to start off with a very much an easy question. Lorenzo, what is the number one thing that people trading and investing in crypto absolutely need to know about filing their taxes in 2022?
Step one, I don't care if you have 1,000 in crypto or 10 million in crypto. Step one is always the same. And that's get all your information into a crypto tax software. And you can then diagnose the problem. It's like going to a mechanic and saying, what's wrong with my car? Well, we need to look underneath the hood. So once you have all your transactions in a crypto tax software, then you can start to say, okay, it may not be 100% correct because honestly, none of them really do the best job, but it's more, okay, let's get this thing in good shape and then diagnose the problem, see what we need to change, see what we need to adjust. So I would say that is the number one place to start is in crypto tax software.
What are a couple of your favorite softwares you use? Because I'm sure there's a couple out there.
Sure, for sure. So I would say there's a different software for a specific purpose. If you're a really, really simple situation, I like ZenLedger. I've been using ZenLedger since 2016. I think that one's really great if you have a Coinbase, you have Binance US, maybe you have a Coinbase wallet. But once you start getting past, really a simple situation, I probably like Coinly with a K, Coinly.io. I like Coinly because you can sort by your highest gain. So a lot of times what Coinly doesn't do well is when you're sending money from wallet to wallet, because now we're in this wallet economy where you have a MetaMask wallet, you have an FTX account, you have a crypto.com account, and you're sending money all over the place. These sends sometimes don't get recognized through the API connections, and that actually treats it as a taxable event. So if it doesn't recognize the wallet that you sent coins to, it thinks that you either paid for a service, purchased a product, or sent money to a friend. And all three of those are taxable events. So Coinly doesn't do a good job of recognizing sometimes peer-to-peer wallet transactions. So then you need to go and recode that into being internal transfer. And then it will take away that capital gain or loss. So I see that as one of the biggest problems Coinly does. But other than that, I really like the software because when you have a problem, let's say that is a problem, Tim, you just sort by highest gains, you go right to it. And it's like, because I get this all the time. It's like, someone's got let's say $100,000 account.
Yeah.
But it's like 300,000 in capital gains. So like, I didn't even make that much money. Like, why is it at 300,000? Well, when you sort by the highest gains, you say, oh, well, here's a $50,000 send that was incorrectly categorized. Here's another $40,000 one that's incorrectly categorized. And all of a sudden you wipe that thing down and now you're down to 40,000 in capital gains. Like, all right, now that makes sense.
Yeah. Okay.
And then the last one is if you have a corporate project, let's say you have an NFT project or a DAO or you have a coin. I like Luca Tax. Luca Tax is good for the corporate side.
Yeah. Okay. Well, so here's a good question with all this. Cause again, now people know, okay, based off where they're going, what their software is, what have you seen maybe with even some of your clients kind of occurring? What's one of the biggest mistakes that people have made when trying to file their own taxes?
So the biggest problem that I'm seeing now is people with rebasing coins, that are into DAOs or into these yield farming, NFTs that have some sort of a utility where you're getting like a piece of action of any time there's a transaction. What I find is the complexity of transactions nowadays have gotten so far out of reach from, I would say, the last few years in crypto, that the technologies are having a really hard time keeping up. So one thing that I really recommend anyone is, if you're getting involved in a project, you're getting involved in some sort of a third-party DeFi protocol, just take a note and document. Because at the end of the day, if you ever do get audited, which we'll talk about getting audited after this, I would love to kind of share my thoughts on that.
Yeah.
Having good documentation is key. So if I put 15,000 into a DeFi protocol for yield farming, just put it in, hey, I went into Outfit Money and I put 15,000 in. So, okay, cool. Now I know at least what went in, because that's what we have to do sometimes. We have to play accounting Sudoku and understand what went in, what came out, and where is the protocol at right now. And when you have that algebra, you can do the math of finding out how much money you made. And that's what ends up happening right now. It's a lot of manual work. It becomes really difficult. So if you have money all over the place, that's going to complicate things. And I get it. I have like 25 MetaMask wallets. I'm like my own worst enemy.
Yeah.
So
gosh, I've luckily kept out of that. I've kept my accounts very, very small. I only have a few of them, but I have some friends that are, they're definitely scratching their heads right now, because they're like, gosh, the tracking of this is absolutely ridiculous.
And 100%. So if you have the ability to simplify things, I totally am for that. But if you don't, if the world's not over, what I would suggest you do, and I do this for a lot of my clients who have really complicated situations, is I go to Miro or one of these flowchart systems and I actually draw it out. So I'll go and have like bubbles for all my MetaMask wallets, and where does that flow into? Where does that money go into? I send it to KuCoin, or I send it to here. And then you create almost like a tree of how your crypto life looks. Because it's like this wallet economy. It's a new way of thinking. It's different. We didn't, stocks don't work like this. I don't send my Apple stock from TD to E-Trade to Robinhood. That's not crypto you could do.
Yeah. Well, here's a good question as we transition. So, in years past, the temptation and the ease to kind of skirt around taxes probably was semi-easy. And of course, in this channel, we do not recommend anyone try to do that. But this is 2022. And I don't think any year, even though last year we did see the pickup in interest from governments, it definitely picked up. But I think that governments around the world have their eyes very much focused on crypto users. What do you expect to see this year when we look at people potentially trying to continue to skirt taxes? What is your expectation for what's going to happen with the auditing, and what are we going to be seeing from some of the government forces kind of stepping up their looks at what's happening in crypto?
That's a good question, Tim. I would say this. I'm blessed to have amazing clients. I got clients in the UN, inside the White House. I have one that's actually working on the executive order, like in the conversations at the table. Wow. So really, really good clients. I'm getting great information, just insight of where things are going. So regulation is coming. I was surprised it didn't come sooner.
Yeah, me too.
But I think honestly, this war in Ukraine really shifted a little focus. But one thing that's really crazy is that I found to be a little surprising is taxes haven't even been in the conversation for the last 6 to 8 months. It's more, where are we looking at in terms of the illegality, where the funds are going, the mismanagement of money. They're really looking at the criminal side of this and focusing a lot on that, and scams, and also a central bank currency. That's really more of a focus, and then that honestly leads to better taxation, right? Because if you have a central bank currency that you need to flow through to off ramp out of crypto, you have an on-off point that's regulated, and that will help then connect the wallets that you use, and again, like I said, this wallet economy. So you got to think how money flows. And it's ironic because in the beginning, everyone's like, Bitcoin's untraceable, when the fact is actually it's more traceable than cash.
Exactly. Yep.
And they use these blockchain analytics softwares that will read a wallet and create a risk score depending on the wallets that you're connected with, because there's recognized wallets and unrecognized wallets. So if you're doing gambling offshore with some like exchange in Singapore, that's an unrecognized wallet. I'm sure that when you put that wallet address in, it's not known. Versus if you're using Coinbase or KuCoin or even a MetaMask, it's relatively known that what that wallet address really is. So these softwares are seeing that and they're getting smarter. And this is what the IRS is using. So once you get audited, or once they find some sort of a click, they'll put this software onto these wallets to read the whole flow, which is kind of crazy. But and this is the scary part. This is only the beginning, and we're going to open up a whole bag of worms with this. I think it's going to be really interesting to see how this evolves over the years.
Yeah,
and it's an exciting place to be at the forefront of it.
Yeah.
And to understand it, to navigate clients through it. But truth be told, I think the IRS is going to take a much more reactionary approach to it. You know, currently right now, there's as complicated as all this is, I think it's as simple as this right now. There's a checkbox. If you check that box and say, yes, I've been doing crypto, or you check that box, no, I'm not doing crypto, you go into two separate piles. And then now they're like, okay, now let's look at this pile next year. I think that's where it's at.
Yeah, there you go. Well, I want to, not that many more questions, but I want to ask you, and you might not have the most detailed answer. I know you're a CPA. You're not here to give people necessarily trading or investing advice. You give them tax advice. But in your experience, because I'm sure you have clients that are both avid traders and, they're DCAers who know when to take profit, know when to buy in. Which have you found in your experience have been some of the best tactics? I know a lot of people sometimes want to really, really dive into trading when in all reality, based off of who they are, they ignore the fact that DCAing and knowing when to take profits with a DCA strategy could still be more profitable than trading itself. What, in your experience, what have you found to be the case on that?
I think the biggest earners have gotten into projects early. Ones that know how to compound their money, I find to be the most interesting. I like this whole yield farming type of strategy, where I think, I have a client that's literally what he teaches is just yield farming. It's a school, and I've taken it down and just getting 5 to 15% a month on your money and just letting it compound. Don't take it out.
Yeah.
Or you take the strategy of what I really like is like that lifestyle, right? If you need $5,000 a month to pay your bills, okay, if you can average 10% a month or even 5% a month, that means you need 50 to 100 grand in an account to effectively pay for your life.
Wow.
These are things.
So you're saying, like, literally, if you're using 5,000, if you can get $100,000 or whatever in crypto and then you yield farm it, you could just live off of that.
Oh yeah. I mean, I have a program right now that I'm getting 10% a month on, and I structure there, man. It's like every month it's like, whoa, I just making this, and I'm not even like, it's not even work,
Hey, that was a great. I didn't even know how detailed you're gonna go into that. That is a great answer right there. I'm personally even gonna look way more into it. I don't know if I have 100,000 yet, but I'm getting close there. So I'm gonna have to do more yield farming. I'm definitely more of an investor. No, here, what I do have a question for you though, because I know the video. We gotta wrap it up here soon. I do want to know, because some people already done their taxes. Can people still extend at this time? And in a short answer, how would they go about doing that? And do you recommend extending taxes?
Yeah, so this is something that I've actually said in our last video that I did with Jeb.
Okay.
And I think it's really an intelligent and safe way to go about the crypto portion of your taxes. Is, we're in this home stretch right now, and if you've been neglecting your crypto taxes, and I totally understand why, file an extension. So file all your normal taxes as you do, your W-2, your Schedule C, your S Corp, your business, whatever you have, just file it normally. If you owe, then great, pay, but file an extension to buy you until October to file your crypto taxes. And if it's something that's really looming over your head, then now you afford yourself some time to do your homework and take a very strategic approach to it and to look at really the tax planning side of things. And that's, I don't care what level you're at. Like I said, you can have a $10,000 account or a $10 million account. Step one is always get you into your crypto tax software. Once you're in there, then you know your situation. Do you lose money? Do you make money? Where are you at? Step two, then get your taxes in good order. File the extension. Step three is understanding, okay, what can we do to reduce this tax bill or manage it going forward? Because it's not so much just this year. It's thinking about this year, next year, the year after that.
Yes. Yep.
Plan. You're having a plan is such a better approach. Then you kind of have an idea. And this is the best thing I said this to my clients in 2021 when they were all thinking we're going to have this big boom. I said, you need to have a plan because as much as it may go to 100,000, it may go to, I called it may go to 70 and come right back down. So have an idea of what you would do in both situations. And that's the type of conversations I have with my clients. And that's something that I recommend anyone who's kind of neglected taxes right now, file that extension and then deal with calm, patience, and strategy.
Yeah. Well, Lorenzo, thank you so much for being here. I just want to kind of close out this video, you guys. It's tax season. Make sure you're doing it right. Again, you have never had as many eyes on you from the government as you will this year. So first thing, if you are kind of in that boat of saying you don't know what you're doing, you can file for an extension on your taxes, as Lorenzo said. The other thing is, just so you guys know, here at Crypto Jeb, we hired Lorenzo to do our taxes. He's a phenomenal CPA. So if you are looking for someone to even help you out, there's a link for him down in the description below. And Lorenzo, do they have a free consultation, or what does it take to meet with you and have a conversation with you?
Yeah. So right now, just being so busy, I do a free 15-minute consultation, which the team can answer any of your questions.
Perfect.
If you do have a much more urgent question, I do have a paid 30-minute window you could do with me. But any sort of questions that can be really, can be answered by the team. My team's excellent. I got Jody and Amber that answer the calls, and both of them have a ton of experience. They've been working with me for a while. Amber's husband is a crypto influencer, and they've created an NFT project. Like they're excellent. So, and then after tax season, I generally like to take those calls as well, because I love being able to meet new people that are coming in. And if I have the time, I 100% take those calls and answer them myself if I can. That's a great way just to get some information and understand what you need to do and get a little clarity. I feel like I'm like a money therapist a lot of time.
Yeah. No, sometimes that's nice just to hear someone just affirm you or correct you. That's always nice. Yeah. Well, guys, that's all we have for you in this video. Look forward to future information. We are going to be doing webinars in the future with Lorenzo to help you make sure you understand what you're doing in your taxes. But like he said, file an extension. You will have a while to continue to do not just set up for 2022, but for the future of crypto as you continue your journey of financial sovereignty. I'll see you guys, though, in the next video. Peace.
Hey, you made it to the end of the video. If you enjoyed this video, you should definitely consider subscribing, because we're trying to help you become financially free in these cryptocurrency markets. And also consider following us on Twitter @CryptoJeb for more updates on the price of Bitcoin and cryptocurrencies. Peace.